When you make pension contributions, the taxman will top up your savings by paying cash directly into your plan. That means for every £80 you invest, the taxman's going to add in an extra £20 or 20%. But why 20%, you might be asking? Well, your contributions are treated as having been paid out of income. That has already been taxed at the basic income tax rate of 20%. The taxman is therefore refunding the income tax you've already paid. The company that manages your pension plan, which is usually possibly an insurance company or a SIP provider, will claim this money for you from the taxman and credit it to your account. So you don't need to do anything. You will automatically receive 20% tax relief. So, whatever contribution you make personally, divide it by 0.8 and you'll get the total amount that is invested in your pension pot. So let's take a look at a simple example. Sarah invests £4,000 in a self-invested personal pension, a SIP. After the taxman makes her top-up payment, the total amount of money Sarah will have sitting in her pension pot is £5,000. That's because £4,000 divided by 0.8 equals £5,000. If Sarah's a basic rate taxpayer, that's the end of the story. But if she's a higher rate taxpayer, paying tax possibly at 40%, she'll be able to claim even more tax relief. For the current tax year 22-23, and in fact until at least the tax year 2025-26, a higher rate taxpayer is someone who earns more than £50,270. If you are a higher rate taxpayer, HMRC will let you claim your higher rate tax relief when you submit your tax return. So if you don't already submit a self-assessment tax return, but you are a higher rate taxpayer making pension contributions, you probably need to start submitting one. Sometimes, however, if you are a company employee, higher rate tax relief can be provided immediately by reducing the tax paid on your salary via your PAYE code. So a self-assessment tax return isn't necessary. You'll need to look at your payslips or ask your HR department whether this is the case for you. Now, let's assume that Sarah's a higher rate taxpayer. As we already know, Sarah's personal contribution is £4,000 and the total pension fund investment, including the taxman's top-up, is £4,000 divided by the 0.8 equals 5,000. The 4,000 is what's known as the net contribution and the £5,000 is what's known as the gross contribution. The difference between the basic rate and the higher rate tax relief is an extra 20%. And this is calculated by multiplying the gross contribution by 20%. So we get £5,000 times 20% is £1,000. So this is Sarah's higher rate tax relief. Effectively, she has a pension investment now of £5,000, which has cost her just £3,000. That's a £4,000 personal contribution minus her £1,000 tax refund. In other words, she's getting all of her investments at a 40% discount. This is the critical number. Being able to make investments year after year at a 40% discount can have a huge effect on the amount of pension savings you can accumulate. So, if you get income tax relief on your pension contributions, what about national insurance? Well, pension contributions generally do not provide any national insurance relief. This is important to point out because national insurance rates were increased recently. Salary earners who are basic rate taxpayers now pay 13.25% national insurance and self-employed basic rate taxpayers now pay 10.25%. Once your income reaches $50,270, the higher rate threshold, you then pay 3.25% national insurance on all earnings above this level. The only case where you do receive national insurance relief on pension contributions is with something called salary sacrifice. And I'll cover that in a separate video. Thank you so much for checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner. And my aim is to help you live a successful lives. And in my experience, that often involves understanding your money. I host a podcast called the Retirement Cafe Podcast that you might like to tune into. I'll put a link in the description below so that you can check that out. And of course, you can also sign up for my weekly newsletter, which is packed with inspiration and tips for a successful retirement. I hope you have enjoyed this video. If you have, please press the like button and of course subscribe to help more people like you and to keep informed of when I put out a new video. For now, I'm Justin King, helping you live your best life.